Metal Resources is a natural resources exploration company and project incubator with a global project portfolio. It's acquiring up to 49% of Minestarters, Minestarters being a blockchain-enabled decentralized tokenization platform. So to tell us all about it, joining me now is Chief Executive Sean Wade and Ian Freeman, the Chief Executive of Minestarters. So Sean, I'll start with you. This investment in Minestarters, I'm guessing it's just a continuation of Power's incubator model.
That's absolutely right, Sarah. Listen, first of all, thank you very much indeed for having us. We're really excited to talk about this. And it's a great opportunity to communicate with our shareholders about this exciting investment, and also hopefully to speak to some new shareholders, people who might want to join us on this journey. What you said there at the top is exactly right. This is absolutely an evolution of what Power Metal already does. People will have seen very recently that the successful incubation and exit from our position in Guardian Metals, the recent IPO of First Development Resources, our assets in Australia, and also the joint venture with UCAM for our uranium assets in Canada, the Fermi joint venture. So, three very successful transactions, two of which obviously are still very much part of the portfolio. And we're looking for the next step, the next leg of our journey, if you like, and to continue to evolve our business model, our incubation business model, which has been described by Rick Rule, for example, as a kind of like a mining merchant bank model. And I think we'll get on to talk a little bit more perhaps about that. But the idea of incubating early stage assets, seeking to develop those assets and crystallize that value for shareholders is absolutely what we're all about, and what Minestarters is going to really enhance for us and for the shareholders.
Well, the backdrop has been one of a sort of a lack of liquidity and not many or diminishing financing options. So reading through your presentation, Sean, I can see that Power Metals and Minestarters shares the view that traditional mining finance has dried up. So what was that, and where has it gone?
Well, that's absolutely right. I mean, there is still financing available. I mean, we're not saying that that the world has come to an end for mining assets, but we do know that it's become scarce and it's become very expensive. I mean, there was a time not so long ago where you could put a management team together, you could get a bit of seed funding into a project, you could create a listed entity, relatively easy. And there was a propensity amongst investors to go for these pre-drilling, early stage assets. Now, I mean, the COVID period in particular, we saw quite a lot of that. But since then, it's been extremely difficult. Everyone will know that the FDR deal, the First Development Resources deal, was very hard to do. It took us a very long time, and we got it over the line eventually. But the markets over the last 2 or 3 years really have been incredibly tough. And I've said this in a number of interviews that a lot of that capital has exited the market. I mean, it may have gone into other sectors. I mean, to a large extent, it may well have gone, we hope, into the sort of token and crypto world, but to a large extent, perhaps never to return. The demographic of mining shareholders, has always been relatively mature, but I think to find young investors, the sort of, I don't know, the 18 to 30 cohort to invest in mining, is difficult. And I attend conferences in the US in particular, Rick Rule's conference, it's not easy to find the new cohort, if you like, to follow that in. So look, it is, people always say good projects always get funded, and to an extent that's true, but what tends to move within cycles is what necessarily constitutes a good project, not necessarily the availability of funding. And I think what we found as an incubator and as a company that seeks to bring assets to the market, both in a pre-IPO and in an IPO sense, that job has become quite difficult. And I think the opportunity is there to unlock a new financing model.
Okay.
And I think, and that is what Minestarters, we hope, is going to do.
Okay, Ian, before I ask you how Minestarters works. I'm thinking about investment cycles and opportunism. So, was Minestarters created due to the emerging trend of companies accumulating Bitcoin treasury as part of their funding model?
Look, first of all, Sarah, really thank you for speaking to us today. It's an absolute pleasure to be here and great to be able to showcase Minestarters and what we're doing with Power Metals and with Sean in particular. It's a really interesting question. Of course, the Bitcoin treasury model, where you've seen companies like MicroStrategy and the Smarter Web company going to market with a Bitcoin treasury model. I would just like to say that is absolutely not what we are. We're certainly not a Bitcoin treasury model. However, you could say that those alternative treasury asset classes have seen a much more interest in the global markets these days, and you're seeing more and more corporations embracing blockchain technology, which is really the enabler of our business model. And what's quite interesting, actually, when you look at it, is that all right, blockchain perhaps is in the vocabulary more than it's ever been, but it's actually been around for almost 20 years now. And I remember working with a man called Don Tapscott, who wrote Economics, 2008, who was evangelizing about blockchain. And it is an incredible technology that does allow for decentralized access to systems and to finance in this case. And so, from that perspective, our model recognizes that this blockchain infrastructure can solve the fundamental liquidity and accessibility problems that early stage mining finance has, regardless of whether companies hold crypto treasuries or really regardless of whether retail investors can get access to, traditionally high bar mining assets. So look, it's an incredible exciting opportunity for the market as a whole.
So, how does Minestarters work in terms of financing mining projects, and how can investors get involved?
Well, we would first of all say we welcome all investors, all categories of investors to become involved. What Minestarters is we're a blockchain-enabled, decentralized finance platform. Our goal is to transform mining finance, and over the next 3 to 5 years, be the global destination for all mining finance project applications. And we know that there is a huge scarcity of liquidity and capital access for early stage mining projects and for all mining projects, really. But we also know that there is an appetite in certain capital markets. And, for example, the real world asset capital market, which has grown from something like $8.5 billion at the start of this year. I think it's somewhere pushing towards $30 billion already this year. I think the number is something around 28 billion. And, this allows, Minestarters, what we're setting out to do is to bridge that gap, the scarcity on one hand, and what looks like an abundance and an appetite for capital investment in another environment. And look, what blockchain allows us to do is provide investors with, transparent, diversified, and liquid investment opportunities that didn't really exist in the current market. And more than that, the blockchain technology enables us to use smart contracts to execute and handle the compliance and the fund allocation and transparent reporting in an immutable fashion. And what we mean by immutable is that tamper-proof, if you like, a little bit like a bank account, can't really be tampered with, in the sense that the bank takes control of all of the transactions, and it's like a ledger that everything's recorded and you can't really change it. Certainly you can't change it as an individual, and you can't really change it as a corporate. And so that provides all the audit trails and compliance that you as an investor would want to see to safeguard your investment, and also from a compliance perspective that authorities might want to see to ensure that investments are safe and that the team are managing those funds as they should be.
I'm just going to borrow one of your words there. You said abundance. So, Sean, what type of projects might investors get exposure to? Would there be an abundance of choice?
Well, Certainly the opportunity here is to potentially onboard dozens of projects within a year. I mean, this is highly scalable. And if we are able to raise a good amount of money from the issue of the token, then there's a huge opportunity. And when the website is fully up and running, and we are at a point of being able to market the tokens, you'll be able to go on the website. There'll be two buttons. One will be, I'm a project owner and I would like to talk to you about funding. And the other is, I would like to buy Minestarters tokens. This is going to be a meeting place, if you like, between the owner of the project and the funder of it. And so it will create a lot more liquidity for early stage mining. But the opportunity for our shareholders here is to be involved in much bigger, much better projects, and potentially those that have obviously a greater chance of success. I mean, one of the things that is a constant reality for investors in the sector is that there is actually typically a fairly low probability that an early stage exploration project becomes a mine. I mean, we all know that it's one of the riskiest investments you can make, but that nonetheless, a lot of value can be added. And even if a project doesn't necessarily become a mine, the early stage part where some resources is identified and some progress is made can create value for shareholders. But the more capital that you can deploy, the better project you can get. So, if you look at Marc Nally's track record, for example, he was one of the founders of Moxico. There's a very substantial copper asset in Zambia. But he has a track record going back 30 years plus of making discoveries all around the world. And we all
this
know
is the founder.
Yes, I
of
beg your pardon. I should have
Minestarters.
introduced that.
Yeah.
So Marc Nally is the founder. He's going to be the executive chairman of the business, and he's the kind of the head geo in the context here. We will have an independent technical committee and an investment committee, which will ultimately decide on the projects themselves and on obviously the way that those projects are funded. That's just a governance structure that's going to be put in place, but it's going to be very, very much kind of founder led. Marc is obviously the genesis of all of this. But what I would say to Power Metal shareholders is here is a platform and an incubator model that operates on a very similar basis to what we do, with the very big difference, obviously, that we're talking about a tokenized environment rather than an equity. You're going to own up to 49% of it. It's potentially going to be very large indeed. And I would hope that our shareholders would see this as an asset play with a high chance of success, versus if I was to deploy that into another very early stage project where I'd have to start with soil sampling and rock chip sampling and geophysical surveys and what have you, all of which are good, all of which we do and will continue to do. We've talked about that in Power Arabia, for example. But here is another venture for our business and another string to our bow, a part of our portfolio where we see very, very significant value developing, because we think that the amount of capital that can be deployed through Minestarters is going to get us exposure to much, much bigger and much, much better projects than we are able to do from a 20 million market cap with the access to capital that we have at the current time. This will promote us into, we think, the next division of operators in the sector.
Okay, so just to get my head around this, Sean, does this the Minestarters partnership herald the end of you buying into mining projects as you have done in the past, and instead you'll gain exposure to projects through the Minestarters platform only?
I think time will tell. I think that there will be opportunities that will exist purely within the current Power Metal portfolio. There is an existing suite of assets which we will look to see if the Minestarters model is able to fund them. I mean, we have our substantial potential nickel asset in Botswana, where I've told shareholders a number of times that we think it could be a district scale asset, but it requires a huge amount of capital to find that out. Now, will Minestarters give us the opportunity possibly to fund that? We'll see. And that's going to be something that we will talk to the investment committee about as a project owner, and we will bring it to the party. But I think the way to think about this really is the synergy between what we do very successfully and what Minestarters is going to seek to do. If you let's fast forward a year and let's assume accept the premise that Minestarters has been very successful and has been able to raise capital through the token and has been able to deploy that into projects. What does Power Metal bring to the party? Is a proven, aside from the seed capital that's obviously going to get us to that point, is a proven track record of being able to access capital markets to crystallize the value in these assets. We've done successful IPOs, successful joint ventures. I've had a 30+ year career, which has spanned capital markets and mining exploration and financing, investor relations, business development. I think people are fairly clear on that. And our ability to get these assets from the portfolio into a position where they have an independent value through a share price, in the case of FDR and GMET as being one route, is something that we can bring to the party here. So going back to the point about, are you a sort of merchant bank, a kind of finance house? We are, in a sense, and we've been described as that. But what this adds to that model already is this FinTech angle with a Web3 dimension and the blockchain platform. So it's evolving our model into a new era. Now, are we going to do deals that are going to be sort of separate to Minestarter? I mean, I think what I would say to people is, look, we're thoroughly committed to this investment. We think it's going to work, and it would make most sense to us to channel our efforts into it. It's going to be a very big part of what we do. So, I don't think we can necessarily be too prescriptive about the exact shape of the model, but certainly we anticipate that Minestarter is going to become a very substantial part of the value of Power Metal overall.
Okay, there you go, Ian. Sean's been looking at his crystal ball and he's looked down the line 12 months ahead, and Minestarters has been a great success. So obviously you've got to make money. What if, however, projects succeed, and what if they fail?
It's a very good question. I mean, I think a couple of things, building on Sean's comments there. Look, let's focus on the succeeding business model part. We have with Power Metals and their crystallization record that Sean has described is a very compelling proposition. And on the other side, we have another plank or another USP, which is Marc Nally's experience with the technical committee, onboarding many projects through which we're qualifying now to find those that we really believe will be successful. And then, of course, we have the enabling and technology and the go-to-market strategy that we have, which we believe will tap into the new liquidity pools that we're seeking. So on the success side, we believe, obviously, that we're very well set up to succeed. Important to remember as well, just a little bit about the Minestarters model. The initial launch will be a single token, and that single token will represent an institutionally curated number of early stage mining projects. So when you're buying a Minestarters token, what you're actually doing is taking a fractional ownership in a number of projects, let's say 10, 15, I mean, the number to be decided, or which we have an idea of in the model, of which, of course, and we all know that, there is risk and some will fail. But to your point about failure, the important thing in this model is that unlike in traditional mining finance, where it's perhaps a little bit more binary, success and failure, and perhaps the investor or the business takes the hit directly on the bottom line. In this model, our treasury acts as a buffer. So we socialize both the risks and the rewards across the entire portfolio. And what that means is it allows us to maintain the operational continuity to continue to fund projects despite the inevitable exploration failures. And so this institutional grade risk management in what has historically been a very volatile sector is something we think is new. And this treasury structure means that we can take appropriate sort of risk and exploration risk while protecting investors' funds. So we believe this model safeguards if you can safeguard in any investment, to an extent mitigates the risks of failure, and removes it from that binary success failure, sort of, for want of a better expression, protocol that you have in many sort of current mining investments.
So what you've created, Ian, is a hybrid of a mining investment fund and a smart token. I'm just wondering, in terms of the protocols, is this model easily replicated? Do you anticipate much competition?
Ooh, look, it's a really good question. Okay, so whilst the RWA market is, it's growing rapidly, we believe that we've got a lot of barriers to entry in the proposition. First of all, we believe the best-in-class selection of projects gives us a head start. Maybe I'll say second of all, actually, if I may. First of all, first to market, we think we're working at pace with our go-to-market strategy, and we're ahead of the game. Second of all, part of that go-to-market strategy is to acquire really good early stage mining projects and onboard them onto the platform, which is great. And of course, thirdly, we have this wonderful team around us with Marc Nally and his 30 years of experience, and his participation in the Moxico success story. And across the board, we've received so far very compelling and supportive, and I would say almost in some instances almost evangelical feedback around, wow, this is great, this is revolutionary, this is something that we expect it to take a little time to execute, but actually we understand why you're doing this, and we believe that Minestarters' ability to bridge this gap could be transformational. So yes, of course there will be competition, but we think that we're well placed to take a really leading position in the market, and that we have a head start.
Okay, Ian, I'm going to ask you another question. Sean, you can feed into this one, because you've given us an indication of the experience that the founder has. But what about yourself? What experience do you, the chief executive of Minestarters, have? And then how can the expertise of Power Metals shape and define the business model? What about you first?
Well, that's very kind of you to ask. Thank you very much. Look, I've spent the last 20 years of my career taking early stage or very early stage technology projects into very early stage, almost pre-regulation, if you like, so getting ready for regulation, high growth markets. And that's where my experience lands. And in these kinds of markets, what's important is that you must firstly have a very strong eye on compliance and the regulation that's coming in the future, for now and in the future. And obviously, the team and the technologies that you build to take yourself to market. This broad base of skills over the last 20 years, I feel, has helped me tremendously in my ability to pull together the strands of a project, take them to market, and create a reassurance and a set of competencies that will reassure investors that actually what we're doing is robust on three strong pillars that we focus on, which is the compliance robustness, the technical robustness, and obviously, of course, the product market fit, which is absolutely critical when you go to market with a tokenized finance, a tokenized finance strategy.
So, Sean, your expertise, the experience of the Power Metals board, how can it shape and define and assist with the Minestarters model?
Well, it's a great question, and it's obviously something that we put right at the heart of developing this project, because there is a very distinct synergy. I mean, let's think about what the alternative was for Minestarters would be probably to have found, perhaps a financial investor, somebody who likes the idea, maybe has some experience in crypto and wanted to be a big shareholder and let the guys, sort of just get on with it and create value. What made me want to grab this with both hands and sign an exclusivity agreement, which we did on day one. We literally, I realized very quickly what this was. and grabbed hold of it for dear life, was that there is such a clear synergy between what we are doing already and what Minestarters is going to do. Ian's talked about a bridge, and that's a word that I really want to leave people with. It's a bridge between the sort of traditional, and we talked about this at the top, the traditional mining finance model that is not necessarily broken. Let's not be too pessimistic, but it is under very, very severe pressure. And for companies like us at our scale, it's very, very difficult to access capital at a sensible cost of capital. And a bridge between that world and this very fast growing world of real world asset tokenization, where Ian's given some numbers, 8 million to 25 million billion, I beg your pardon, this year alone. And there are other, we've had a lot of data from the likes of Standard Chartered and BlackRock talking about how big this sector is going to become. And a bridge into that growing pool of capital. And let's put it in very simple terms. We're good at what we do. We've had a lot of success at it, but we are hungry for more capital because we're hungry to build our business. And we need to go to where that capital is. And that capital at the moment is not where it has been historically. It's over here in real world asset token world, where it's growing very, very fast. So can we develop a project, a set of protocols, a platform that can access that? Absolutely. That's what Minestarters is doing. We're already very well advanced with it, and we're very excited about giving a lot more news on this. And that's another important point, is that, shareholders love to be updated and love to hear news, and we love to give it to them when we are able to, from a regulatory point of view. This will generate a lot of news. We'll be very excited to share our progress as we get towards the launch of the token itself. And obviously, when we get past that point with onboarding projects, and we hope to see a lot of growth, this will generate, we hope, a lot of focus on us and a lot of interest. So bridging those two worlds is what this is all about, and we have a very complementary set of skills to be able to achieve that.
Okay, Sean, I will ask you about an exit strategy soon, but before I get there, Ian, where could this partnership with Power Metals go? What's your ambition for the business, bearing in mind you haven't launched the token yet?
Well, it's a very good question, and of course, this is the thing we get most excited about. On the launch pad, so to speak. And our partnership with Power Metals positions us, uniquely in the market, as we've discussed. The thing is, we're tokenizing, through our own project development, building out a proprietary platform. We have a number of different go-to-market strands, and this vertical integration opportunity, not only with Power Metals, but with others, helps us to provide a quite unique funding mechanism. And of course, when you look at the tokenization market currently, and Sean mentioned BlackRock there with their 2.9 billion fund, and others, one of the key benefits for those organizations is the ability to trade 24/7. And what that means is, ultimately, some of those funds that are offering yields, you can work with them out of hours, you can work with them at a low cost, because actually in a decentralized finance model, you're taking out quite a lot of the middlemen, and you've got smart contracts that are automating processes. And what we're seeing is that in the traditional finance world, these protocols are creating real value for shareholders and real returns. And so we're extending that. And so when we talk about partnerships, we believe that our partnership ecosystem will extend not just with Power Metals, but to some of the big funding partners in these areas, and ultimately start to deliver back value, not only to our shareholders within Minestarters, and therefore into Sean's ecosystem at Power Metals, but we think that we can provide something transformational over time. And so it is our goal over the next 3 to 5 years to be the number one financing bridge, to use that word that Sean is keen on, and I think is a very good representation, for mining finance and capital markets. And we think that actually the world it's all out there for us. We just need to execute, and we need the support of investors and the support of good partners like Marc Nally and Sean Wade and the rest of the team.
Okay. Understood. But let's talk about exits, because Sean, you did mention Guardian Metals. You made a lot of money from your investment in GMET. So what factors would make you consider disposing of the Minestarters investment if you are following Power Metals' mantra of explore, develop, crystallize?
Well, that's a great question, and it's something I know that all of our shareholders are very keen to understand. I think the way I would put this is that Minestarters for us is it's an asset play, as I said at the beginning, and I hope people will see it as something that's going to increase in value and therefore our share of that. But it's not an asset in the ordinary sense of the mining assets that we have typically assembled into IPOs and then sold to the market and exited. This is a platform that is going to reshape mining financing as we know it, we believe. And it's something that is going to, in itself, create the crystallization events separately. So let's put it another way. Let's say that we don't exit or seek to exit Minestarters. We seek to exit the things that Minestarters produces. So let's imagine that, you know, a year or two down the line, we've got a very nice collection of, say, copper assets or assets in a particular geography that would make a very nice standalone IPO, which we would like to crystallize for the benefit at this point, essentially, obviously, of the token holder, but which Power Metal shareholders would have ownership of. You know, if Minestarters is an equity participant in an asset, then by extension, so are Power Metal shareholders pro rata to their shareholding. Now, let's imagine that in that instance, we say, look, we could do an IPO here. The market's open. There is an opportunity to take that collection of assets to market. That is the exit event you're talking about. Now, all of that said, could Minestarters be a standalone IPO in its own right at some point? Of course, that's possible. But clearly, my job is to maximize the value of everything we do for Power Metal shareholders. And so I would only contemplate doing something like that if it was the most obvious route to achieving value for Power Metal shareholders. What I would not want to do is to surrender the upside, which we think is inherent in this business, at a stage simply to, as it were, do an IPO or to bring cash in. The virtue of Power at the moment is that we have got a very, very healthy balance sheet. We have got relatively modest outgoings at the moment. I mean, we're looking for a funding solution, as people know, at Power Arabia, and we think we've got a great chance of achieving something there. In the meantime, obviously, we're funding that business from our balance sheet. But the Fermi joint venture assets are funded through the UCAM investment. GMET and FDR obviously have exited. So we don't have huge commitments. So we're in a very strong, solid position. We can run our business without having to go to the market to keep our lights on at the moment. And so we're under no pressure at this point to look to crystallize something that we think has got a very, very long way to run and a fantastic amount of value to create for us.
But Ian, there is a little bit of pressure on you. So let's have a look at the short-term timelines, because Sean, your partner, not necessarily in crime, it keeps talking about 1 year down the line, 2 years down the line. But, you know, what is achievable over the next 12 months on the platform?
Yeah. Thank you for clarifying that last statement, by the way. Partner in growth, I prefer, if that's all right. So, look, it's very clear. The first executionable items that we have is to design the product fit and we're just tailoring the product fit so that it's really in the sweet spot and satisfies the investment community demand. So that's the go-to-market, and then from there launch the product. And so we're very keen to claim the white space that's out there in terms of, okay, this is something fresh. This is an investment that Power Metals have made in this business. And in the background, prior to the launch price investment, a lot of work was going on to ensure that we had all of the building blocks in place, building a small team that was lean so that we can scale, finding technology partners and finding distribution in terms of how we distribute the token through the exchange. So what I can tell you, in the next 6 months, you'll see some significant movements in this area. And obviously, at this point, yes, there is positive pressure about executing and taking the product to market. But we're very clear on our objectives. We know exactly what we want to achieve, and we have a great team in place to support the project. So feel very good about it. Feel very confident that we'll hit those milestones and launch the product in the fashion and within the timeline that we've laid out for ourselves.
Okay, so finally, Sean, you're not known for being over-excitable, but on the scale of 1 to 10, with 10 being the highest, how excited are you about this partnership?
Oh, look, without question, I mean, right at the very top. I mean, this is a 10 out of 10 for us in terms of what this can do or will do for Power Metal, what it'll do for shareholders. I mean, I like to think of this as us graduating up into a much higher division. There are a lot of companies that have successfully executed incubator models. One thinks about Sprott, for example. We talked about Rick Ruler earlier, and the scale of those, and Dundee Corporation is another one in Canada, which we know very well and which we seek to emulate. But these are very big businesses who generate hundreds of millions of value. That's the space we want to get into. That's where we want to take our shareholders, and we think that this is the means to get there. I mean, I think in the 2.5 years since I've been CEO, there hasn't been anything that's come across my desk that has excited me as much as this opportunity does, because it gives us the chance to really break out of that kind of very junior, very small scale, hundreds of thousands of pounds worth of commitment and expenditure and so on, into a much higher, better category where our shareholders will see, I think, not just meaningful growth in the balance sheet, we've delivered that, but what I hope will be a new iteration where that value will start to translate through into returns directly for the shareholder, which is obviously to all of us is a much higher share price. So I do think that this will have a huge impact on the business, and it's something that we are very excited about and really looking forward to getting started on and delivering.
Well, don't let me stop you. Sean, Ian, it's been an absolute pleasure, and I look forward to the news to come. Thank you.
Wonderful. Thank you,
Thanks,
Sarah.
Sarah. Very nice to talk to you. Thank you.